Hey everyone, my name's Andy. My channel's Finding Value. If you are looking for undervalued investment opportunities, click subscribe. I'll get you stuff in front of you, companies, sectors, whatever it may be, and you guys can figure out what you want to participate in after doing your own due diligence. So this is just a financial education channel only, and I'm giving ideas to everyone that participates on the channel. So today I'm going to go over commodity prices. Commodity prices, I'm looking at a wide array of everything. And what you're going to see here is that we probably have a problem with the dollar. Dollar's declining. It's declining quite rapidly. And where you're going to see this is it's going to manifest itself in higher commodity prices. So let's jump in and look at the commodity areas, sectors, see which ones are doing what. So inflation is here. It's making its mark all over the place in commodities. And I'm guessing we have at least 20% inflation or more. Because if you look at that CRB index, it's up year to date. That's year to date, 22.34%, 10% monthly. This is, again, financial education only. Here is the new privately owned housing unit starts. And whenever we get far above the average line, this red line's the average demand for housing unit starts. Whenever we're below it, we usually have these kind of disinflationary areas, especially during like a recovery phase. This is a deflation more type scenario. This is a disinflation as we come up, and then it's inflation when we get up like here. So inflation, 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 and guess what we're entering right now? An expansion phase in real estate, which is going to be inflation. And they're printing a bunch of money behind it, making it even worse. So we got multiple things contributing to this inflation. And where we're going to see that is manifest itself in commodities. And look what we got. We have a chart break. It was going to break here, and they're like, oh, it's too soon. We need a way to hold this thing down. And, you know, it's possible that they'd had COVID on purpose. And I don't want to say that, but it's possible. Maybe we are close to inflationary problems or something, and or an oil crisis, an energy crisis of some sort, and they could delay the crisis by having people stay at home and doing lockdowns to figure out solutions. I don't know, but this is kind of interesting that we had the commodity price break to the upside and then have the COVID sell off right after. But we're coming back up. It's a structural bull market. It is structurally inflationary. And that's why you're seeing the commodities come right back higher after this, after COVID, that is. Here's lumber. You got this nice big chart pattern that was developing. It broke to the upside. We had March. So lumber was taking off before COVID. Lumber was already moving. Lumber was screwed up before COVID happened. And nobody even talks about that. You know what they say? COVID caused the crisis in lumber. No, it did not. Lumber was ready to moonshot before the crisis happened in 2020 of March. You see it right here with me. It broke the pattern, broke the resistance line, started flying, and then March came. Boom. Knocked it down. The supply-demand balance is all jacked up. We got tailwinds with the declining dollar, and you see a moonshot. A total moonshot. Now here's copper. Copper's doing a moonshot. And look we broke this pattern back here. It came, if you come across, it broke out, it paused, and then it moonshot. We're just moonshotting right after this pattern. And I think this is going to go way higher. Way, way, way higher. So I don't know the exact pricing, but it's going to be nowhere near 470. 4, 5, 6, 7, 8 years from now. Steel rebar, gone to the upside. You can see the resistance line broke through that, and it's just moving on up. Crude oil, what do you think that's going to do? Massive pattern, and we're sitting right there, ready to break. When that breaks, you could see a massive move, especially if that dollar falls. Remember, oil is the biggest inflation hedge. And when that dollar falls, if you look back here, that dollar fell and this thing was going vertical. if we have a surge of inflation where that dollar drops, I have a feeling that this thing could go quite a bit higher. And I don't have the timing. I don't want to say that it's going to go to $100 by this summer or $80. I don't know. But what I can tell you is if the conditions are right and the demand comes back, it's not going to be anywhere near $64. Iron ore broke to the upside. Looking fantastic. A little back test and gone. Aluminum, same thing. Whenever you get these patterns coming in here, consolidating up, coiling up, and then boom, gone. We're coiling up this gigantic pattern to move to the upside. We broke to the upside already, and it's gone. Tin, gone. That thing's going to move quite substantially. Zinc's in this upward channel. If you draw or chart out the channel like this, we got to break up here for this guy to really move. Nickel is still chilling out in its pattern. And I have a feeling once it, in a year or two or whenever it is, when it breaks this pattern up here, watch out. It's going to be gone. So a couple of things to take away here. The dollar moves these things all over the place. And I've heard, I've been around some of these channels, been reading some articles. Some people are getting pretty worried that the dollar could drop substantially. And I'm going to do an entire presentation on inflation. So you guys are prepared in case this were to happen. I'm not saying it will happen, but inflation is there. Inflation is the increase in the money supply. What I'm worried about is the velocity kicking back up, because if the velocity kicks up and they have all this money in the system, I mean, it is like game over for the dollar. So I'll do a separate presentation on it. I'll give you guys my opinion on it. And it is a little bit scary, but if you're in these types of investments, they will save your BUTT and physical metals. Physical metals is another spot to be because if the dollar goes away, you have to transact somehow. And I hate being that extreme. I don't want to come off as that extreme, but it is prudent to have a little bit of physical metals just in case it does happen. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.